Hi, everybody. Welcome back to another episode of 3 Minute Success. I'm your host, as always, Jarrod Music, here to talk about how do you actually decide if an advisor adds value for you. This is the number one question that we get asked by new entrepreneur families when we're meeting them for the first time. How do I know if I'm actually going to get value out of the fees that I pay to work with you? So this certainly applies for us here at Entrepreneur Aligned and any advisor that you're looking at hiring. So let's dig into the framework. First one, what is your hourly rate? You can take box 11 on your 1040 tax return, divide that by 2,000. It gives you your effective hourly rate. And let's say that that's $500 an hour. How much time is that advisory team going to save you? We know that our high and low estimates are 20 hours a year to 50 hours a year, and that includes an expert team with systems and tools and analysis processes built out to be able to do this really efficiently. But we know we're going to save at least 20 hours a year for our clients. So if that's at $500 an hour, then we're really talking about $10,000 of value just in terms of time saving. Number two is working with an advisor. How much advantage does that offer versus versus investors who do it themselves without an advisor? We can look at a variety of studies from providers like Vanguard and Russell and Envestnet, and they say that working with an advisor adds between 1% and 4% per year. Some of that is making sure that you have the correct assets and the correct tax type of accounts, that you're being efficient with your investment management, that you're not selling at times when it gets scary, that you have a really good investment approach that you can stick to, all of those things. But let's say they add 1 to 4% per year. So if we're looking at a $400,000 investment portfolio, we're talking about $4,000 a year, and that's kind of at the low end of what that could be adding. And then multi-year tax planning, definitely the most difficult to quantify because everybody's tax picture is different, and especially so entrepreneurs because our businesses are all highly different. But really look at your gross income totals for the year. Again, that box 11. Look at box 12, which is your itemized deductions list. Are you getting maximum value out of those? Are you clustering them in years when you have high income where they're going to give you the best tax bang for your buck? And then just really looking at quarterly estimated tax payments. Do you understand the years that you actually need to make those? Other years when, hey, we're going to be hitting the safe harbor requirements and I can keep more flexibility with my cash flow. Those are just a few examples. But let's say with really good tax planning over time, could you add 1% or reduce your tax burden by 1% of gross income over an extended period of time with proper year-to-year tax planning? We think that's certainly achievable as well. So these do add up to fives and tens of thousands of dollars, along with all the other things that advisors add, helping you get clear about what on the personal financial side best allows you to express your vision and values as a family, helping to mitigate risks and ensure there are no single points of failure that are going to blow everything up for you, and then helping you focus on your family, doing what you love in your business, because your business is always going to be your best returning asset that you have from an investment side, so you should continue to focus there. So hopefully that gives you a little bit of our framework. You can go to entrepreneuraligned.com and look at some of the calculations we have to help you better evaluate any advisor that you're looking at working with or us here at Entrepreneur Aligned. Be back with you again next week.